These are sample questions that were given to some job applicants to test their Excel skills. So in this question, we've been asked to find the quantity of goods that a company needs to produce in order to make a certain amount of profit. So what comes in mind first is for us to design an income statement. So from the question, we have certain set of assumptions which are the quantity of goods to produce. The question says we should find the quantity of goods that will enable us to achieve a net profit of $80,000. So we state all the assumptions. The quantity of goods to produce, we do not know, so we leave the place blank. And we then come to the unit cost, which is $10, the unit price, which is $18, and administrative expenses, that includes wages and salaries, that is $60,000. And we have our corporate income tax, which is 24%. The company pays tax if it makes profit. Now the target profit for the company is the company has to make a profit of 80,000. So let's prepare the income statement of the company. The goal is to find the quantity of goods that the company needs to produce in order to achieve this target. So let's design a simple income statement. So first, we need to know the total revenue. The total revenue is unit price times the quantity of goods produced, and the cost of goods sold is the quantity of goods produced times the unit cost. So we then get our gross profit. That's gross revenue. Gross revenue is equals to total revenue less cost of goods sold. We then less administrative expenses, which is an expense. Less administrative expenses. That's gross income less administrative expense. This gives us income before tax. So it's gross income less administrative expense. And here the corporate tax. Note that the company pays tax only when it makes positive profit. It pays zero tax when it makes when it doesn't make any profit. So we have to use the if function. So if income before tax is less than zero, the company pays zero. However, if it is false, then the company pays a 24% tax on the income before tax, which is J11. Yes. And we get to our net income, which is profit or loss, the net profit or loss, which is income before tax less the amount of tax the company pays. So now we need to look for the quantity of goods that the company needs to sell in order to make the target profit. So what we use is the go seek. So it's under data. Once you click on data, you go to what if analysis. You go to and we look for go seek. So the set cell is our target cell, what the cell that we want to achieve that value, and the value that we want to achieve is 80,000, the quantity of goods that we want to produce. So we just click OK, and Excel computes it for us. So we can now conclude the company needs to produce we have to run it up because the laptops, we cannot produce decimals, so we have to run it up. And so this is the first example, and it's very simple. Job applicants were given 5 sets of questions. So this is the first example. By using the goal seek, it helps you to achieve the target value. Let's do a bit of formatting, yes, to run it up. And it's looking good. Next, the next question is on amortization, loan amortization. We've been given a set of assumptions, a loan amount of 100,000, an annual interest rate of 6%, and the number of years to pay the loan is 3 years. So we need to compute the monthly rate, which is the annual rate divided by 12, because we have 12 months in a year, and the number of payment is the years times 12. So it means we have 36 payments. We use the PMT function, which the first value takes in the rate and the number of payment, and then we come to the present value, which is the amount of loan that we contract today, and then we make the payment at the end of each month. So we use the annuity, we use the due. Since it's negative, let's make it positive to make our working more simple. So we insert negative in front of the payment function. Interest on first payment is computed on the initial loan amount. That's the monthly interest rate times the initial loan amount. And now the principal is just the difference between the monthly payment and the interest rate. So we can easily compute. And the remaining loan amount is the initial loan amount less the first principal payment. Then we come to the second payment, which is the interest, the monthly interest rate here. Let's lock it, times the remaining loan balance at the end of period 1. So we do same for the principal, which is the payment less interest. And the remaining balance is just the previous balance less the principal payment. So from here we can select the 3 and drag them down. So we see that the last payment, the remaining balance is 0, which confirms that our result is right. And as interest reduces, principal payment increases. So next is a search. We've been given a bank data, loan data, that we have to search for the gross loan of a particular bank. So we are going to use the index function. We combine the index and the match. So the index, we select the range is what we are interested in. So we select the range. And the next is to use the match. We combine the index and the match. The match of our lookup value is the name of the bank clerk, and the lookup array is where the bank name can be found. So we select the bank names, and the type of search that we are looking for is an exact match. We then match it again, because here the criteria are 2. we need to look for banks and year. So the next is we need to match the year. So the search here is covered, so we can, but it's E4. You can see that it's E4, and the lookup array is where the year is found. So we select the cell. Next, we close it, and voila, we have it. So let's validate our result. Let's try and see whether it's, let's use another function. Let's try and use VLOOKUP and see if we can get, so the lookup value is the name of the bank, and the lookup array is the year that we are interested in. Here we are interested in 2020, so we select the 20. So I made a mistake. So I just created it and see. Yes, we're having the same values, so it means what we did here is right.